Many people in the United States believe that the stock market will always kind of continually grind higher. But in 1989, in the nation of Japan, everything looked to be going so well. Everything was on fire, the stock market was up, but then something tragic happened. The stock market crashed. It crashed 63%. Whole lives of funds and money was lost in a matter of days. And a lot of people were optimistic at that time. They said, but it will come back. It will come back. 30 years later, the stock market finally got to the same level that it was in 1989. It took 30 years for people to get their money back. And by the time that they got their money back, it was worth far less. When we look at the arrogance, when we look at the idea that the U.S. economy is bulletproof, that U.S. stocks will always keep going up, that everything will be great forever and ever into the future. When I look at a lot of preparedness people, preppers, when I look at people who are getting ready in so many different ways, but then we look at what's happening with their portfolio in their retirement funds, when we look at what's happening with their investment in the stock market, I think it's important to make sure that we're prepared for a non-crash event. But at the same time, when we look at what is about to transpire in the United States, the simple fact is that stock market purchasing power will never ever get back to where it is anymore. The de-dollarization, the moving of the entire world off the reserve currency of the dollar is going to bring us to a point where if we have a stock market crash today, tomorrow, next week, and we see the stock market decline by 40, 50, 60%, we're going to go over some numbers here in just a moment. But in 30 years from now, if we have a similar thing like Japan, in 30 years from now, will your dollar be worth the same as it is today? And the answer is absolutely not. You'd be lucky if a dollar is worth a penny of today's money. So when you think about things like that, you're going to see that there's most scenarios, the U.S. stock market will never have the same purchasing power as it does today. Is that really the best place to be? Hey friends, welcome to the Poplar Report. I'm Steve Poplar. I'm an accountant by trade. I've seen people lose all sorts of money. I've looked through stock market returns for the end of year when I do a lot of people's taxes. I have seen it all, folks. I've seen people make a killing. I've seen people lose their shirts. I've seen people lose millions of dollars in the stock market. And I'm going to give you some of the background of what financial planning looks like and really what it looks like to you and how it can impact you. Because we're being told by a lot of fund managers, we're being told by a lot of financial planners that what we're doing with stocks, bonds is safe, but it's really not. We're getting into that and a whole bunch more. Hit the thumbs up if you don't like the mainstream media and you want somebody to actually talk to you factually about numbers and facts, give you some historical examples like Japan of what could happen going forward and what some of the most financially sound people are saying is going to happen right now. All right, folks, we do want to thank our sponsor of this video, Genesis Gold Group. They do a fantastic job moving people into more secure, safe assets. There'll be a link at the end of the video so that you can talk to them if you want to talk to them about getting out of stocks and bonds yourself. All right, so Japan's crash in 1989. They lost 63% of the value of the stock market. And like I said, it took 30 years to get back. But now, even though they're back, their central bank owns 80% of their stock market. Of the ETFs out there, 80% are owned by the central bank. The central bank owns so much of so many companies in Japan that you could really almost see it as basically a communist country, because the government, or a government entity in this case, owns a majority of most of the companies in the country. And when you look at that, it's like, well, are they really private companies anymore when the government owns that much of them? Of the government debt issued by Japan, 50% of it is owned by the central bank. And friends, that is the direction the United States is moving towards. The U.S. Federal Reserve now owns 20% of the U.S. federal debt. 20%. And they are doing stuff that is not being regulated or supervised by the United States government. Back in March, they just decided to print $500 billion and inject it into the economy. Remember the whole banking crisis? The little blip on the radar that happened? Well, they injected $500 billion and basically undid most of the tightening that they did over the last 6 months. I know, they were really twisting those screws to tighten down everything, and then they just went and boom, spent another $500 billion. You know, it's like a lot of people we know, right? They start saving up money, and over 6 months, they're saving up all this money, and then they blow it on some bad purchase or an emergency that comes up. You know, are they really saving money, or are they just, you know, storing up money just to spend it? The price to earnings, it's called CAPE, the cyclically adjusted price to earnings rate. Which I think is the best way of valuing how stock markets are. Basically, that shows that the United States stock market is overvalued by about 42%. Now, what often happens is that it overshoots the fair value. So if it drops by 42% and then it kind of keeps going a little bit, you start seeing how the number sounds very similar to the Japanese crash. And when we look at the understanding of the market, basically, when you go out and you buy the average U.S. stock, so you're buying a portion of the company, you're basically buying just to break even. That company needs to make as much money for the next 22 years as it did today, as it did this past year. In order for you to break even, okay, do you see how that's probably not the best investment? The average U.S. company needs to earn the same they did last year for 22 years in the future before you get your money back. Yeah. We got major inflation coming our way. It's already here, but it's going to get a lot worse. We have a recession that we're already in. If you actually look at the numbers and you don't listen to what the federal government says, you see that we've been in a recession taking into account government spending all the way back to last year. About this time last year, we were in recession. And we really didn't come out of recession when the government just printed a whole bunch of extra money. But if you actually take government spending, all the excess government spending, so like if you were to cut government spending down to like what government actually took in revenues, so basically you take out of the GDP the money that we stole from all the other countries, or all the money that we borrowed, borrowed without being able to ever pay back. I use the word stole because that's a more accurate thing. What happens if you go to the bank and you take out a loan that you never intend to pay back? That sounds like theft to me. But if you borrow money from a family member that you never intend to pay back, that's theft too, right? If you take out the money that we're stealing from other countries for our government's spending, we have been in recession since 2008. That's a long time ago, isn't it? Friends, we think that our government is so strong, but really all we are is one big pirate ship. The United States is one big pirate ship that's just basically looting and plundering the work of other countries. We give them little pieces of paper like little IOUs, US dollars. We give them these IOUs and treasury bills and treasury bonds. Oh yeah, we'll pay you back. We'll pay you some interest too. So when you steal people's money and you give them a little piece of paper, that's still stealing. The United States is one big pirate ship that's just basically looting and plundering as we go along. And at some point, people are going to stop willingly and stop complying with our plundering. At that point, that's what we call de-dollarization. When people stop and other countries stop investing into our government debt, the world is going to change very rapidly. And do you think that all the U.S. economy is going to be functioning just as properly for the next 22 years in order to get you back what you invested in the stock market? That's why you see that, like, all these people that tell you that everything that you're investing in the stock market and in these bonds are very stable and safe. When the stock market crashes, they're going to throw up their hands and say, who could have known? Who could have known? And then you can point them to this channel, you can point them to other channels, you can point them to other people who are watchmen on the wall saying, hey, what we're doing doesn't make sense. Listen to the accountants who are like, that doesn't add up. Friends, the math doesn't work. I know a lot of people out there have been trained in Common Core, and then they look at the stock market and it makes sense. But all of us who are taught basic algebra and basic trigonometry, and we actually studied math the old school way where we had to memorize the tables and everything like that, multiplication tables. You do the very simple math with just a tiny little bit of skepticism where you actually ask some questions, and you'll find that the stock market and the way that we're structuring into our economy doesn't make sense. It just doesn't. If you are investing in a business, you want to invest in my business, and I tell you that it'll take 22 years before you get your money back, that's insane. I mean, you'd have to have a lot of faith in me. You want to be like, well, how do we know that for the next 22 years things are going to be good? You can't know that. And with us moving into more and more of a recession, and at some point our debtors are going to be like, we're going to stop loaning you money because you're a deadbeat. Our country is a deadbeat that goes around pillaging from everyone else. At some point, other countries are going to stop being okay with that. They're going to start saying, hey, we're earning money. We're actually making products. You know, we're pumping oil out of the ground. Why should we be propping up your government and letting you guys spend way more than you make? The stock market is overvalued by 42%. There's a reason why Warren Buffett is sitting on hundreds of billions of dollars in cash. He knows the inflation rate. He knows that there's inflation and it's bad to sit in cash, but he knows the stock market is way, way overvalued. The United States GDP, when you look at the stock market's GDP, that's Warren Buffett's favorite metric. The problem is the GDP is so skewed by government spending that we don't actually have money for it. Once again, we're borrowing money from all these other countries. All that comes back to this very simple thing. The stock market can and probably will drop dramatically in the near future. When is that going to be? I've been predicting that for over a year now. Yeah. People like Michael Burry and a lot of these other people who saw the 2008 crash coming. They saw the crash in 2008 coming well before it happened. But just because we can't give you a date on when it's going to happen doesn't mean it's not going to happen. How much money can be printed before we get ridiculous, out of control inflation? How much money can be stolen from other countries before they finally have had enough? I don't know the answer to that. But I do know that at some point, the music is going to stop and there's only so many chairs. You need to get out now. Right now, amazingly enough, there is an awesome solution. Gold, silver, other precious metals, industrial metals are at ridiculously low valuations. They are ridiculously cheap. Compared to the stock market, if you get off the stock market up here at the highs and you move straight over into metals like gold, platinum, silver, I'm talking about physical metals, not shenanigans that's in the stock market. Don't get into an ETF that promises you silver and gold. Actually get physical silver, gold. If you can have it at your home, awesome. If you're stuck in a retirement fund like a IRA or 401k, and you can't actually take that cash into your hands without some crazy taxes, and you want to keep that in a retirement fund, but you want to put it into something safe, you can get silver, gold, platinum coins that are yours, that you do have to keep in a depository. It still needs to be in a bank, but they're your coins. They don't belong to anybody else. They're actual physical coins that belong to you in that bank. That's what Genesis Gold Group does. And if you're in retirement funds, I suggest doing that. I mean, this isn't financial advice, but it is life advice, that getting out of something that's dramatically overvalued to something that's actually dramatically undervalued is a really good place to be. There's a lot of countries out there buying up gold and silver stockpiles right now. A lot of countries see the writing on the wall, and they're saying, we don't want to be holding dollars and US Treasury bills. We want to actually be in physical metals, because that's where the action is going to be in the coming years. You can join the smart people there too. I'm going to put a link right over here of Genesis Gold Group. You can just click on that link and you'll go straight to the website. You can talk to them. If you call them, you're just going to be having a conversation with them. They're going to answer your questions, send you some information if you want it, and there's no requirement that you need to go ahead with them. But Jonathan and his team has helped almost 100 of you guys actually move over your retirement funds or a portion of your retirement funds, and I've heard nothing but great things from you guys too. That's why we talk to them. They're a Christian-based organization. They will be able to talk to you about your faith, as well as giving or whatever you want to do with your money like that. So I'll put that right up there. And if you want to check out another video from me, there's one right up here. I'll see you guys later. Steve Poplar of the Poplar Report, out.